Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, March 27th, 2023. Welcome back to the podcast, Sekido-san.
Good to be back.
It's good to have you, and recent market developments leave us with plenty to discuss. As you know, as our listeners know, there's been a pretty, developments have been fast and fierce since the collapse of Silicon Valley Bank a couple of weeks ago. With concerns, seems to be some sort of crisis of confidence associated with U.S. regional banks. Obviously, those concerns spilled over to Europe. With the forced bank merger in Switzerland. So I guess what I'd like to start with is sort of like that sets the stage. And financial market reaction has been pretty extreme. So how has this affected Japanese markets?
So for yen asset price action in the Tokyo market has been surprisingly calm and moderate. The firmness of the dollar yen's downside is especially surprising. Although the yen appreciated during the financial crisis, dollar yen is firmly supported above the 130 level. Structural changes are underway that makes the yen more vulnerable to weakening over the medium to long term. More specifically, strong resource imports, even with the strong exports, make the yen unlikely to strengthen. So for the spread of risk from US and European financial concerns to the Tokyo market has been limited. But in light of our experience from past financial crises, we can't rule that out. Over the near term, dollar yen is likely to remain firm on the downside, with JGB rates dropping and yen basis neutral price action prevailing through the end of the fiscal year. However, secondary effect of credit jitters in the European and the US banking sectors and the financial impact on Japanese investors still need to be scrutinized. We have to watch yen basis widening as a test of whether the secondary impact of financial system instability will have an effect on Japanese investors' funding conditions, or whether Japanese regional banking sector restructuring will change. We will continue to closely monitor yen basis trades.
Okay, so far, limited reaction. Tokyo markets have had a limited reaction to this sort of banking crisis of confidence across the Americas and Europe. But watch yen basis to see if that to see if that's still the case, and any widening would be a sign that it's affecting Japanese institutions. That makes a lot of sense. You also note the how dollar yen is so well supported. Yen has benefited from a flight to quality perspective, but perhaps less than you might have thought, all other things being equal. Does that sound about right, Sekido-san?
Right.
Okay. All right. So switching topics, there's been a decent amount of investor flow data that we've received recently that can be, particularly can sort of be lost in times like this, but I think is important to highlight. So why don't we start with the US TIC data, which covers the month of January.
U.S. Department of Treasury International Capital US TIC data for January released on March 15th shows that the Japanese investors turned net buyer of U.S. Treasuries by $1.4 billion for the first time in 5 months, after net selling by $9.4 billion in December. They net bought U.S. stocks by $3.8 billion and U.S. government agency bonds by $1.4 billion and net sold U.S. corporate bonds for second straight month by $1.8 billion. More high-frequency data from the Japanese Ministry of Finance suggests that this buying continued in February, showing Japanese investors shifting gears to accumulate more U.S. treasuries in 2023.
Okay, so after record selling in 2022, Japan comes out a buyer, specifically of U.S. Treasuries, and as you mentioned, that buying has continued into February and March, actually.
Right.
Let's see. Why don't we also talk about JSDA data that I believe came out last week, and for clarity's sake, that data actually covers the month of February. So we just discussed what Japanese investors were doing in January in the U.S. market. So we're going to discuss what Japanese investors and foreign investors were doing in Japanese financial markets in the month of February.
In February, Japanese Securities Dealers Association JSDA data shows that the foreigners turned net buyers of JGBs by 103 billion yen after unloading a net 4.1 trillion yen in January. While the pace of net buying of TDBs slowed to 26 trillion yen, foreigners unloaded a net 593 billion yen of long-term JGBs, and pension funds, trust banks net bought 511 billion yen, and Citibank's net bought 375 billion yen. In February, the foreigners continued to sell long-term and super long-term JGBs, while Japanese banks bought yen and foreign bonds all around. Japanese banks benefited from valuation gains from their yen and G10 bond positions over the short term amid the uncertainty in the US and European banking sectors. However, medium-term funding costs could increase if yen bases keep widening. This looks like it could be the start of a financial crisis, so optimism is not warranted. But heavy dollar-yen basis arbitrage rules are supporting a tightening by dollar-yen basis, and Japanese investors do not appear to have difficulty with funding dollar assets at this time. Japanese are the biggest holders of foreign assets in the world. They have huge overseas business portfolios. Even if the recent financial crisis-like moves turn out to be only temporary, overseas asset funding costs will increasingly be weighing on the financial sector. We expect foreigners' JGB arbitrage trading to help alleviate the financial stresses on Japanese investors and companies.
Okay, so that JSDA data from February sort of supports some of the earlier points you meant about, watching for a widening basis, but you also note the strong buying of foreign investors, JGBs, presumably much of it, on cross-currency asset swap, which should help keep the basis from widening to at least a certain extent. So I think we've covered a lot of ground so far on the podcast. So I kind of want to summarize things, with your outlook across various markets, including yen rate, spot dollar yen, and yen basis.
The FOMC raised policy rate by 25 basis points at its March meeting and clarified that the policy stance could be more flexible. In the near term, credit concerns in the U.S. and the European banking sector will continue to be a major issue as the end of March approaches. While maintaining a caution against the yen strengthening in a risk aversion phase, dollar yen downside has been surprisingly steady and firm, and yen selling falls showed a certain degree of firmness. We have a bearish bias on dollar yen and lowered our forecast range to 129.50 to 132.50. The yen rate swap curve has risen and steepened. The reversal and rise have been faster than on the JGB yield curve. The front end of the JGB yield curve continued to decline. JGB auctions for the 40 years on March 28th and the 2 year on March 30th. Maturities are approaching. Today's today's 40-year JGB auction will test the strength of the steepening pressure on the JGB yield curve. We expect the 2-year JGB auction to pass without incident against the backdrop of strong JGB demand from foreigners. We change our yen yield outlook to be neutral and steepening bias. yen basis curve has not widened noticeably, but instead has actually tightened. According to the Ministry of Finance weekly securities data on March 12th to 18th, Japanese investors purchased a massive net 3.5 trillion yen of foreign securities. They broken down and showed that the vast majority was driven by a net 3.3 trillion yen of final medium to long-term foreign bonds. They also purchased 118 billion yen of foreign stocks and investment fund holdings and 64 billion yen of short-term foreign bonds. After the bankruptcy of Silicon Valley Bank, dollar and the euro rates declined significantly. The Japanese made a conspicuous increase in foreign bond purchases. At the same time, foreigners purchased a net huge 3 trillion yen of Japanese securities, which breaks down into net purchases of 4 trillion yen of medium to long-term yen bonds and 78 billion yen of short-term yen bonds. In addition, foreigners sold a net 1 trillion yen of Japanese securities and investment fund holdings. The downward pressure on the yen rates due to the fund flows into JGBs from foreign investors was overwhelming. And net selling of Japanese stocks also increased. In the Tokyo market, G10 bond flows were extremely heavy but mixed, resulting in a slight tightening of the yen basis. Domestic and foreign investors' flows converged in a Tokyo market, and they have hampered yen basis widening so far. We consider yen basis to have a neutral bias.
Yeah, so I mean, you make this point here. I just want to emphasize it for our listeners. So foreign investors bought a record number of JGBs last week, or I guess it's the week before last, so the week ended March 17th to be more specific. Just a huge amount, suggests, there's been sort of a persistent short covering by foreign investors sort of fighting the BOJ. They got it right in December when the BOJ unexpectedly widened, the bands on yield curve control and sort of got it wrong when the BOJ doubled down in the January meeting. So that degree, that short covering, very well may have continued given those huge purchases. And then, at the same time, there was almost record purchasing of foreign bonds by Japanese investors that same week. I think, if I'm not mistaken, only one of the weeks in March 2020 was larger. So just huge two-way flows, in and out of Japan. So just want to make that point, emphasize that point to our listeners. So again, to summarize, you are bearish on dollar yen. You are neutral on JGBs, although you have a steepening bias to the curve that obviously comes after a pretty decent rally. And then you're neutral on cross-currency basis. But as you've mentioned a number of times, watch out for some of that, or keep an eye to see if there's widening that could be telling us something. Yeah, so I think that's about it. Sekido, excellent stuff. I think we covered a lot of ground here, and we'll look forward to having you on the podcast next week.
Okay. Thank you so much for having me, John. Always.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.